Welcome to another episode of Investing Made Simple. I'm your host, and today's episode is all about ETFs. Sounds like the name of an alien, doesn't it? Don't worry, by the end of this episode, this topic won't seem so alien anymore. So buckle up and get ready to embark on an exciting journey into the realm of diversified investing. Welcome to Sustainable Sense, where we invest in climate defense. You're in for our hot take on all things money, markets, and the environment. So, what exactly are ETFs? No, not that ET. ETFs are exchange-traded funds. So, it's essentially a basket of securities that pool together the money of many investors. These securities can include stocks, bonds, and commodities, and are often designed to track a specific index, sector, or asset class. When you invest in one ETF, you're going to be exposed to all the underlying securities held by that fund. Hold up. Didn't we say this is called a mutual fund in our last mini-series? Good question, listeners. Yes, but there are distinct differences between ETFs and mutual funds. We'll get into that later in the episode, so stay listening. ETFs are created by ETF managers, also known as sponsors. They're responsible for designing, developing, and in most cases, managing the ETFs. Once the sponsor knows the type of security they want to create, they file a plan with the Securities and Exchange Commission to create the ETF. So the first step in the creation process for an ETF sponsor is to decide which sector or market to track. For example, there's biotechnology as a sector and NASDAQ or Dow Jones as a market. Then what they're going to do is create a fund with the goal of emulating or simulating the underlying sector or market. Then the ETF provider files with the Securities and Exchange Commission to get the new fund approved. And boom! Upon completing the approval process, the ETF provider constructs the new fund using a combination of assets that best accomplishes the goal of the ETF. Finally, the fun part in my opinion, the ETF sponsor will make several decisions to get the new ETF ready to hit the market. The ETF gets a symbol, a name, and a target launch date. The power that's in their hands. Let us know what you would name and symbolize your ETF. The ETF sponsor will also decide which stock market the ETF will trade on. From there, it's just a case of ringing the opening bell to officially begin trading the fund. As promised, let's talk about how ETFs are different from mutual funds. Though ETFs and mutual funds might look similar from the outside because they're both baskets of securities that thousands of shareholders typically invest in, ETFs and mutual funds have a few major differences. ETFs and mutual funds are both types of investment vehicles that allow you to invest in a diverse portfolio of stocks, bonds, and other securities. But if you remember, mutual funds are pools of money from many investors to purchase stocks, bonds, and other types of securities. Portfolio managers manage the investment decisions in actively managed mutual funds. However, ETFs are traded on stock exchanges like individual stocks, and their prices fluctuate throughout the day based on supply and demand. On the other hand, mutual funds are bought and sold at the end of the trading day at their net asset value and are passively managed, making them more rigid than ETFs. Also, ETFs generally have lower expenses than mutual funds because mutual funds are professionally managed by portfolio managers. With ETFs, you have more freedom and flexibility. Number 3, ETFs and mutual funds both offer diversified investment opportunities but have different investment objectives. If you want to trade frequently and incur fewer expenses, an ETF may be more suitable. However, if you prefer a portfolio manager overseeing your investments, mutual funds may be more appropriate. Just like how baskets come in several different designs like loomed, straw weave, paper mache, and whatever else you crafters can think of, several types of ETFs exist. For example, there's stock ETFs, which track a particular set of stocks. And then there's bond ETFs. Bond ETFs may be attractive for investors interested in fixed income investments. This is because they typically pay regular interest and dividends to investors. Number 3, we have commodity ETFs. These ETFs invest in commodities like precious metals, agricultural goods, and natural resources. Interesting, huh? As you can see, ETFs are pretty versatile. Coming in fourth, we have sector or industry ETFs. These ETFs track particular industries like biotech, healthcare, or energy. And lastly, for today, we have currency ETFs. Currency ETFs track foreign currencies and can provide investors exposure to the foreign exchange market. And of course, there are many more. So all ETFs incur varying levels of risk, so it's a great idea to look at the pros and cons before you choose to invest in ETFs. Still a little confusing? Here's an example to solidify things. Let's say you're a fancy investor and want to start looking into ETFs because you're financially smart and inspired by your favorite podcast, Sustainable Sense. If you want to invest in the performance of the S&P 500 index, you can buy an ETF that tracks this index. By doing so, you're effectively owning a small piece of each of the 500 companies in the index, giving you exposure to the overall stock market's performance. So that's it for today's episode. Overall, ETFs are popular among investors for their simplicity, flexibility, and cost effectiveness, making them a valuable part of many investment strategies. They track different sectors or markets and are more flexible and versatile than mutual funds. ETFs are a great way to diversify your portfolio, but should be considered with some risk. As usual, if you have any questions or comments, you can email us at sustainablesensepodcast@gmail.com, or you can DM us at sustainablesensepodcast on Instagram. You can also send us episode suggestions or feedback too, and make sure to follow us wherever you listen to podcasts. And as always, invest your sense in climate defense.